Hi there, everyone. Welcome to our Software Survivors Enhanced Growth Investment Thesis session. It's a new investment we've got coming out in the sectors of healthcare IT, enterprise resource planning and cybersecurity. This investment's for wholesale investors only or sophisticated investors only, S708 qualified. General information only, not personal advice. Now, I've invited Kai Chen along today because it's very important to sort of get on his expertise. So Kai, you've essentially pulled together MPC Mosaic for us, and you've got really unique insights in terms of what these agentic AI platforms are essentially capable of. Because our project essentially 3 years ago would have cost $1 million and a team of 10. And now, the way in which you pull together our platform is a really good case study of how these things can affect software. So I'm just going to let you run through and explain agentic AI and how it's going to affect software. Mate, take it away.
Cool. All right. Yeah. So no, that's a very good introduction in terms of our experience learning from what AI can do. It is empowering because, basically you have to know what you're doing, but it does mean that you don't have to do all the grunt work. There's things that you get stuck on where you can get unstuck with AI. It's got a lot of knowledge. But what we're really moving to is agentic AI, and it's basically having these AI models. Everyone's used to ChatGPT. You can chat to it. It's very smart. Claude or Grok. You play with it and you go, wow, this thing has intelligence. But the next stage is basically agentic AI, and what that means is, as opposed to just it thinking things, it can actually go and do things, right? So that automation flow will come along, and basically, as we progress, it'll get smarter and smarter, and you have agency in the world. So we're basically unleashing these smart robots who initially can only talk, but now they can actually do things. But it's obviously given rise to people going, okay, look, like if we're going to have all these AI agents, what's the consequences? Are SaaS irrelevant anymore? And I think it's a bit of fear mongering because everyone can see the implications of what's happening because you go, wow, these smart things, and the natural extrapolation is going, everything's going to be automated, everything is going to be done by AI. We don't need people anymore. But I think it's a very crude way of looking at it. And basically for us at MPC, we go, hold on a sec, right? Like there's an element of truth to that. However, we got to be a little bit more refined when we're doing it from a investment perspective, because what's the core thing that these AI and SaaS businesses offer? The core value is it's solving a real world problem. It's a business, right? And that's never going to change, right? If you have a SaaS business, let's just take, for example, a cybersecurity firm like CrowdStrike. The end goal is actually to ensure that the companies that they are supporting, they are secure, right? And that can be done by AI, sure. However, we look at through a framework of 5 pillars, and really at the top of it, we got to think about it from a perspective, what's not going to change? How is it not going to change the business case? Because it's actually proprietary data, right? Data is the fundamental thing to everything. Like, think about it. If we can use the medical case example, and it really reflects it really well, right? Because you can go on GPT, you can go on Claude and ask it a question. If I have these symptoms, what's the diagnosis? And it would be extremely eloquent.
We've had a real world example from my wife is in United Health, and people are looking it up, but these things give these answers back. But because the only thing that's freely available on the internet is not actual medical data, because you've got to pay for that, it then goes and sources its data from elsewhere. So we've got this hallucination issue that's going on at the moment, where the AI can only source what data is available to it. And quite often it's licensed or you've got to pay for it, etc. But it will still give you an answer. And that's what what they call it, AI hallucination. But the more, we saw it very early on in the AI thing, where if it would just keep feeding on incorrect information but then deliver a response like it was absolutely certain that was the case. So I think the term in terms of the medical industry, particularly, it's where basically all of these proprietary data or I guess research documents, etc., are all behind not pay gates even. They're securely behind
It's proprietary.
university security. Yeah, so they're not able to source that information. So it's not always. I mean, this is where this software sell-off has gained momentum, is because people keep going to ChatGPT or something to ask, why is my stock going down, and it keeps feeding it the same incorrect answer. So the data is, I mean, you're only as good as the data you've got, essentially. And there's been a lot of real world examples in a lot of sectors where it's not. But sorry, I interrupt. But yeah, you go on.
Yeah, no, that leads on to a very good point, and it's like the second moat is basically the embeddings and like the business case for it, right? Like you have this operation this business has built up. Sure, you can go, oh, I will code RIA tomorrow. I can create a website in one day, and to be honest, it's actually pretty good at that even now, right? But it's the business case, it's the users, it's how it's integrated, it's the trade secrets, and that's not replaced overnight, right? Like it does lower the barrier of entry, where it becomes a lot more competitive in the landscape. But at the end of the day, how good of a job are you doing to solve business cases?
And then like compliance barriers as well. I mean, particularly in the medical industry, you've got you've still got to get FDA approval, and you've got to be HIPAA compliant, which is the confidentiality, and you've got to deal with government procurements and all sorts of things where which you just can't. You can build the software, but it takes on average 18 months to get an FDA approval for something. So even if you got that approval, then you've still got to go and sell it to people as well. So, it's a very simplistic argument to say that, just because I can write it, well, then I'm going to be as big as Pro Medicus or Veeva or whatever. So, but yeah, the domain logic, explain that to us.
Yeah, so I think, obviously, in certain domains you have specialized skills. Like, for example, WiseTech, which we will talk about later on, right? Like, they are a powerhouse in logistics, and that's their core domain. So if you have someone who has no idea about how logistics work, some 18-year-old kid in the garage going, look, I can do what WiseTech can do, you don't have the domain knowledge, right? Like, you need to be an expert in that field in order to be competitive in the products that you create. So I think lowers a barrier. However, you still need a team of experts who specialize in that domain to know what they're doing, and knowing what they're doing is the key part, right?
And explain frontier research, because you had to explain this to me, and you did a great job of it. But I mean, what does that mean?
Yeah, sure. So, for example, basically, it's very similar to proprietary data, where it's like you're creating your own research, and again, this is what's training the AI models, right? Because that's really what gives it an edge. We can go download research articles online and all that stuff, but all companies have their own research team. Well, forward-looking companies or frontier companies. They have their own in-house research, and that's really the valuable piece, because that's what gives them the edge. No other companies have that information. They've spent time to research and actually polish that research, and that's why they're better than everyone else. So AI, that's why it's lower in the tiers. You can use AI to polish up that research and give you ideas and implement faster, but you still need to create those unique ideas in those companies.
And even to the point of our experience, I mean, we traded together for many years. I've spent over 100,000 hours in markets sitting in front of screens. You very much, there are certain things that I don't know. People call it a hunch, but I think that undervalues that experience, etc.
Correct.
So we've got three sectors, of which we picked our two best companies in those sectors, but it all falls under one thesis. So we sort of explain why the healthcare particularly works, with that regulatory validation cycles and HIPAA compliance and FDA approvals, etc. I think you very largely touched on WiseTech and Technology One in the enterprise resource planning. We could probably and look, even cybersecurity. We've had we've had a case where Claude, the particular, well, from Anthropic, the particular step up in technology or AI that's really disrupted and caused this the last leg of this dramatic fall, actually hacked the Mexican government and stole 150 gig of data in the last 24 hours. So it was saying, the thesis was 3 days before, Claude's going to solve your cybersecurity worries. I don't think anyone now is going to trust Claude because it just went and hacked a government website. So, and that was despite it having some like rules pillared into it as well. So these were three sort of sectors where we really did see. All of the pillars very much fit for these three sectors. And this was part of it, just a broader, sort of heat map that we made that we'll show later on. But yeah, I think really we'll try to keep this a little bit short. The healthcare, it's the FDA validation, the proprietary clinical data, and AI is likely a moat extender, not a disruptor. Then we've got enterprise resource planning with WiseTech and Technology One. They're very much ingrained with within government organisations with highly sticky clients at 99% retention rates, and they're deeply vertical software as a service. They're not just doing one thing.
Yeah.
And the last one with cybersecurity, it's like I said, platform consolidation tailwinds. There are 2 trillion events every week and compounding. These guys, like AI, is more likely a hacking threat than it is a solution, realistically.
And the amount. So people argue that AI at the moment can code all these apps and stuff like that, but the security concern is really concerning because it's not production code. And as we see, even from very simple things like writing an article, there's mistakes. Imagine that in a code base, there's mistakes in security, right? So it actually plays the case for cybersecurity, to be honest.
Yeah, actually, I think it's almost a beneficiary, really. So this is our Agentic AI threat map, essentially, and we did this, and you can scan that QR code down there. And look, and I'm going to be upfront. We coded this on Claude. But we're very sensitive with our data in terms of when I will go and collect a bunch of different research, etc. We will vet the data. We will not, and when we put all of these documents into to ask the AI the question, we are very specific at saying, do not reference outside sources, do not create your own opinion, only reference the research documents attached. And look, it coded this, and when you go to the actual website, it's HTML code. You hover over it, it actually gives you the reasoning. There's 45 companies in that map there, and it really did. And we gave it a very, very clear and specific mandate. We didn't just let it run off on its own. And I'm finding as well with Grok, which is one of the higher reasoning ones, and Claude particularly, you've got a lot more experience in, but I find that if you give it too broader parameters, it will pretty much just start creating its own argument.
It's always very convincing. Like regardless of whether it's right or wrong, it's going to sound very, very convincing.
Yeah, so we've done it on a. It's a little bit different to this. We've done it on a map where whether the threat is now or up to 5 years threat, and then how big of a threat it is, whether they're a beneficiary, low, moderate, elevated. So 0, it's a fairly high threat here. There's been a bit of debate about that in the office and Salesforce as well. This will be a living document that we have at NPC Markets ongoing. Because there's going to be leaps in technology all the time, and it's not just going to be So this living document will update on a very regular basis, and if we do find that there are moats occurring that we underestimated, which we think Xero and Salesforce might fall into the category of, then at that point we can adjust those pillars. But we're trying to really approach this from a scientific standpoint, and these are obviously being enhanced growth, high conviction trades. So we really don't want to, be mucking around in the maybes. We want to be mucking around in the certainties. And you can just see here. So this is, this is back to about sort of, I guess, July, August. So the Nasdaq's essentially almost unchanged or slightly up. It probably is up actually. But you've got the likes of Palo Alto, CrowdStrike, Veeva, Technology One, WiseTech, and WiseTech just quietly has recovered 16%, and Pro Medicus, which has also recovered, that have really disconnected from disconnected from the index, significantly, despite the fact that we believe that many of these, if not all of these, will actually be AI beneficiaries. But when markets panic about things, and economists aren't technology people. I'm being a markets guy for 30 years, and there's a reason that we're checking everything by you at the moment because of your first-hand experience, etc. Is that you need someone, as you say, that domain knowledge to essentially work out. So look, we won't go through these individually. You can get the investment document. It has a very clear outline of why we chose these stocks in particular. But look, high margins, revenue growth, things like switching validation. It would cost nearly $5 million to switch from these guys. Reapproval times. All of these metrics essentially are very compelling. But I think you're probably better off going and looking at those and reading those in your own time in the investment document. So the enhanced growth investment here. So we've got three separate pairs: Pro Medicus and Veeva in one, which is the healthcare; WiseTech and Technology One in the ERP. And we've got CrowdStrike and Palo Alto in the cybersecurity. You can do one of them, you can do all of them, you can do more of one and less of the other, etc. That is completely up to you. That's why we set it up that way. You are marked by the worst of the basket. But for an example, if say you wanted to invest $100,000 in these, instead of investing $100,000 and having unlimited risk to the downside in the event that we're wrong, you put down $13,500 and you get $100,000 notional exposure. So you don't miss out on the upside of $100,000. And then, but if we are wrong or there's a new technology leap forward that we haven't seen coming, etc., the maximum you can effectively lose is 13.5% of the notional. So you have to think when you're investing, you invest the cash amount. Usually that's how you think, but we want you to think in terms of how much you would normally invest notionally, and then we can modify that based on this. So you sort of brought up some areas.
It's kind of like smart leverage, isn't it?
Yeah, it is. And because it's got that built-in downside cap, and you're getting leverage to the upside. For those of you who are self-managed super investors, it is actually not leverage, and we've had many in order to ask about this. It's actually derived by buying call options, which is what gives the capital protection and the upside exposure. So you're okay there in terms of investing in a self-managed super. We get those inquiries all the time. So on average, all of the strategies are around about $13,500 per 100,000. I think the cybersecurity one's slightly more expensive at $15,000. You're sort of getting around about the 7 times leverage mark there, and it's a 12-month strategy. So even if it goes down through these levels, and you're out of the money, if it recovers in this last quarter here, it doesn't matter. It can drop 50% and then skyrocket back out, and you're okay. The investment is live until the maturity date. So basically, have a scan there. You can register, and you can. That's the same one as the Agentic AI threat map. But up the top there is a form if you want to scan to register, and let us know that you're interested. We are looking to close this fairly quickly because we've started to have a bit of a bounce in these stocks. However, we are very mindful of the fact that we won't be striking until at least Monday. Which falls into March, only because we've got concerns around the Iran strike this weekend. So if you could get back to us as soon as possible, we will be striking early in that first week of March. It usually only takes about a day to get set up. for those of you who are set up, obviously just email myself or Kai and let us know how much you would like to do. This is one of those ones that look, if the investment thesis plays out exactly as we think it will, or we're confident that it will based on the current information, this is very much a once in a generation buying opportunity in some of these companies. And we're highly confident that it should play out. So thanks very much, Kai, for your expertise. And I know this is a little bit longer than normal, but I really thought it was important for people to understand and get told the story from someone who's actually done it, rather than me just harp on and pretend like I have the expertise that you do. So thanks very much, we'll hopefully hear from everyone in the near future.
Thank you, guys.